Hello, trading is closed on the 11th of March 2025. As always, we'll start with our disclaimer. We'll go over our calls and then make our predictions. It's my trading plan for Wednesday, which is 12th of March 2025. Remember, it's my plan. You can always change my plan. My plan can be wrong. Trade at your own risk. My house isn't going to have electricity tomorrow in regular trading hours. I'm going to try to go elsewhere and follow the markets from a different location. I've never been there before, and if it doesn't work, that's the reason. I just haven't tried it before. Well, we had a call for the pattern with the early low. That's this, and tomorrow should have the early high. We said that as long as we could hold on to yesterday's recovery, we should trade higher even if we didn't close higher. Well, it's kind of tough to interpret this. We get down, promptly recovered it, and then we did trade higher. So you could argue it worked, but as far as I was concerned, when you gap down that much, it's gapping down sharply in the undesired direction. And even though you recovered it quickly, I'm just going to say the idea was killed, even though it actually worked. I'm not going to take any credit for that one. This is just a reminder of what we said. We had a target. We said ultimately we'd see 56.3802. Now we came within under two handles. The high was 56.3630. That's darn close, but there's no time limit on these ultimate signals. It's close, but not close enough. It should still print. And there's usually resistance over these targets, but that's just on the first challenge. You challenge something and you pull back. If you do hit it again, resistance isn't going to hold. So if we do recover from this, I think you'll go higher than that target, probably much higher. Now, during the day, MEJT said this drop was false, it wouldn't stick, and it retraced. In the afternoon, we got a sell signal with an optional higher target. That's low enough to satisfy the sell. The optional target actually printed. There's a wall into the close. Very often these things are going to gap up over the high of this wall, because this could be panic selling. So that's a possibility to gap up over this. Doesn't happen every time, but it happens often. We are still putting a bar on the weekly chart completely under the lower Bollinger Band. You can certainly collapse from this, but if you ask me, it's a dangerous time to initiate a short position because prices don't tend to stay under that band very long. We're still dropping on the daily chart, and that doesn't look very hopeful, but the one thing you should notice is even with all these drops, we just can't hold on to the lows at the close. We always recover at the close here. And that is an early sign that smart money is accumulating on the way down, even though I don't think this is the absolute low. We gave a number of places where we could see reversal. One was just under 55.40. We had 55.3981. That's within 11 points of where the low was today. Is that close enough? Well, on a percentage basis, it's close enough. I still don't think that's the end of the drop, but if we do reverse from there, you could explain it as being there. This is also pretty close to being 50% of the way from this low to this high. if you squint, you can see in here is a prior FOMC announcement price, which is support resistance, and we closed right there. We gapped down, hit a lower low, closed over all these lows. If we maintain it, that's a rejection of the lows. And so far, this is an impulsive moves, which not only recovered all these lows, actually recovered prior highs, which is very bullish if it's maintained. And so far, it's just had a 61.8% retracement. So if we can hold on to this, that's a bullish pattern, because what you want to see when you go up is not lower highs and lower lows. You want to see higher highs and higher lows. And because we overtook these highs so far, on this way up, we have higher highs and higher lows. We're no longer making just lower and lower highs. If this holds at this 61.8%, we could have a good recovery. So not only is it at this level, you've got some pretty good fibs here. I mean, if this is A and that's B, C is equal to twice A exactly. And if you look at wave black C, and that's A and that's B, that could be C with A, B, C, and C is equal to A. Now that's not the only way you can count this. You can count this as a 5-wave structure. 1, 2, 3, 4, 5. If you consider this drop a truncated 5th wave to NC. It's a valid count, not the only one. But if this is a decline with a truncated 5th wave, and that's red A, a black C, if that's what the count is, then C is equal to red C is equal to exactly twice A. So if this is a 5-wave structure and that's a truncated 5th, those fibs work too. But you have to find some way to count this wave down. Well, this is a 1-minute chart, and it's possible to counter this an ending diagonal triangle. I mean, that could be A, and look at these fibs. That could be C. That could be E. All these fibs work. And if there is an ending diagonal triangle, the targets overtake this high. So we have a rejection of the move to lower lows. Finally, we've hit a new high. We have a fib target that works. We have Fibonacci support, a wave target that works. It all depends on whether or not this holds. Now, it doesn't have to hold. We have a lower target. But if this does hold, and if we do overtake this high, we're going to go through this ultimate target, and most likely a lot more. That's if it holds. It hasn't happened yet. We have to use the mixed signals rules here. Commonest thing is a gap and a prompt move outside today's range, and I think that's very likely. Wednesday's pattern is a really high regardless of where we open. Typically it's a bearish day with a final hour low, but if it's strong, more strength's going to come. Major economic reports, the CPI and PPI, come out before the open tomorrow and Thursday. I just can't predict the response to these reports with a sufficient degree of accuracy. Signals are mixed. It is bullish. We gapped down, hit a lower low, and closed over midday lows. And if, capital letters, if that's maintained at the open, this should lead to higher prices printing regardless of where we close. There's a wave count and fib retracement at the low of day compatible with gapping up and promptly overtaking today's high, but it's negative. There's a lower target. If we don't gap up, the rules call for that to print. There's very strong support at the close, and if we gap up, if If we gap up, we could go appreciably higher. We are way oversold. Now we gap under this, then the idea falls apart. I mean, crashes come from oversold markets, but typically they're in third waves of multiple degree, and I can't count this that way. We go under this, you could certainly crash, but we are way oversold. We're at support. We have a good fib level, a good support. We finally are hitting higher highs. This wall on the close is often reversed. I don't know how we're going to respond to CPI, but we now have 3 higher ultimate targets and 3 of them in this close proximity. I've never had 3 that stayed at the end of a year. And again, from 2013 to the beginning of 2025, I've only had 2 of these that didn't print. So we have 3. At some point, we're going to see these print. If we do get the gap outside the day's range, and if the gap is higher, we have all we need for a very big rally, even though it's the pattern with the early high. And again, if we're under here, we can still collapse. But this is the best chance the bears have had in a long time to get egg on their face. So it's the pattern with the early high, but if we gap over here, which is entirely plausible, could be a very strong rally. It's a pattern with the early high. That's today's call.